Hey folks, Dan Bird here with the daily scan for Wednesday, October 22nd. And looks like Netflix might be throwing a fly into the ointment here in our rally. Netflix missed last night. Tesla reports tonight. They could miss too. Let's take a look and see what's going on. I'm doing a quick one today because I've got company here and I got things to do. So let's jump into it and take a look. First, we'll look at, oh, by the way, this is Stock Charts. This is not my website. This is Stock Charts website. They are offering a 50% upgrade for current members. So if you already are a member, especially if you have the basic and you want to upgrade, right here on my website, you can just click on this button right here to upgrade. It will take you to their upgrade screen. You can see basic is this one right here. It shows you what's in everything. I have the extra, the middle one. So that's the one that my current service. So if I wanted to upgrade to pro, I could do that at 50% off. Or you can go from basic to extra at 50% off. Now is a good time to do that, especially if you're a basic user. The extra one gives you a lot more capability. All right, just wanted to point that out. Anyway, let's go back here to the charts page and look at the 10-minute charts real quick. And right there, we're starting to head lower. Right now, we actually didn't open too bad. Looked like we might just kind of tread water, go sideways, but now we're heading lower. Money flow is flowing out. Technology is down. Discretionary is down slightly. Communications is down. So technology is the one that's really pulling things down. On the defensive side, the defensive sectors are going up, staples, utilities, and real estate. So the rotation is out of aggressive and into defensive. Healthcare is moving quite a bit higher. Industrials is pulling back, but it's the one that actually was pretty strong before. So it's pulling back. Materials is up and energy is up. So definitely rotation out of technology and aggressive into defensive areas. Here's the rotation view, growth versus value. I talked about this yesterday, that even as the market went up and it was actually hanging in there, growth versus value was flat or actually moving down. Actually, yesterday morning, it was moving down and just kind of flattened out. That's not what you normally would see if the market is still in a bullish stance. So, and now it's moving down even more. Discretionary versus staples going down. If Tesla misses, that's going to drop off a cliff. Technology versus S&P is down. Semiconductors are down. So again, everything's moving out of aggressive. The breadth actually looked pretty good yesterday, but look at the bullish percent index, still continuing to go down. I'm going to look at that in a second and show you some things here today. Here's the Russell 2000, small and mid caps. Money flow is negative on that one. It is going down. It looks actually weaker than the S&P. And you can see down here compared to the S&P, it is underperforming the S&P. Not only below the zero line, but below the moving average line too. So mid cap, small caps are starting to underperform. This is mid caps breadth right there, and small cap breadth are still trying to move up, but we'll see how long that lasts. NASDAQ 100 definitely falling off a cliff right now. And interestingly, the up volume minus down volume is still above zero. So it's not red, it's still green right here. That's it's trying to hang in there actually, but advancers minus decliners is moving lower. And you can see the VIX is starting to tick back up again. Not as high as it was last week, but starting to slowly move back higher. VIX right now is at 19, so not quite at 20 just yet. And then here's the breadth for the NASDAQ 100, which looked really strong yesterday and rolling over a little bit today. So there's the bullish percent index. Before I look at that, I want to look at a couple of stocks that people asked me about. So we'll do that real quick. First was PFE. This is Pfizer. Pfizer momentum is going down. It's hitting right on all of its moving averages right now. It likely will get rejected right there, although it's sort of in a testing mode. It's below the chandelier exit right here, this one right here. So this is the point that you would exit. Definitely right here, it would be the exit point after this nice run higher. It's pulled all the way back, and now it's trying to decide which way it wants to go. But does not look great at this point. You can see it had a nice run from April, the April lows down here, then had a real nice spike higher, but pulled all the way back. So this is a good example of Keltner channels. So these are the average true range channels for the stock. And it is, these Keltner channels are, let me see what they are, 3, 2, and 3. So this is, the green one is 2 times the average daily range. The red one is 3 times. And when it gets to above 3 times, it's into the 4 times area. That is a very extreme one. You can see right here, when it gets to 3, it reverts to the mean, back to the 21. It gets to the 3 right here, revert to the mean. Same thing here, reverts to the mean. So that's what happened here, right up there. That's the point where you should exit if you're trading. Came back down, actually went below the 21, and now the 21 is critical resistance. So it needs to get above that. It looks like it might actually try to do that, sitting right on the 200 day as well. So this is a really critical point for PFE. The next one was O Realty. This person asked if this would be a good one to play real estate. This is a REIT. I believe it's a REIT. It's a realty income. This is a way to play stocks that are related to real estate. I would not necessarily say that it's a way to play real estate. But if you like, I would go and look at what's in their portfolio, what they're doing, what kind of real estate. If you understand real estate and you think their business looks good, then certainly it would be a good one to play in that sense. Real estate is a long-term investment, so you should consider this as a long-term investment as well, and probably look at it on a weekly chart. And right now on a weekly, it is sitting right, this goes back to last year, sitting right on resistance. So this is the point where it's either going to break out or it's going to break down one way or the other. So that's my opinion on this. I mean, this is stock, so I wouldn't necessarily say it's a way to play real estate. But if you like the real estate, if you like the business, it's the same with any stock. If you like the business that they're in, it's a real estate business that they're in. If you agree with the way that they're approaching their business, then their stock should do well. But I wouldn't necessarily make it a substitute for real estate. That's just my opinion. Okay, the last one is Oracle. I'm going to show Oracle here in a minute as well. Oracle, person said it's sitting right on the 50-day, which it is, sitting smack on the 50-day. It actually might be closing a little below it right now. And I talked about this yesterday, that the support line for this is right here at this level right here. So a little bit below where we are right now. That's at about 248. Yeah, 248 right there, 249. Let's call it 250. Right about 250. And Oracle right now is selling for 271. So if it breaks that line, then it probably is going to be headed to the 200. There'll be a lot of other issues and problems in the market if it breaks through that line. So this is the area where it might be a good place to add Oracle, but I would let it confirm that it's going to start move higher. All right, so last thing I want to show is first I want to show you the bullish percent index right here. And before I show that, I want to, you can see over here this distribution zone right here. This is from the end of 24 into 25. I talked about this a lot back here, and I talked about it in the context of the Wyckoff market cycles. So this is a typical market cycle. There's an accumulation phase at the bottom, goes up and down. There's a markup phase. Then there's a distribution phase where it goes sideways at the top, and then a markdown phase where it falls down, pulls back, goes down to some support level before going higher. So keep that image in mind. This is Wyckoff, who came up with this back 100 years ago, and it's been true ever since. So let's take a look at what we're doing now. So this is the end of 24. There's the distribution phase. If I go back further, you would see the markup phase. And then we have the markdown phase right here to the April low. And then we rallied, and then we're in a channel going up, and then there's a new channel the blue one. The green one is the larger channel. The blue is the smaller channel. But notice what it's doing right now. It looks to me like it's another distribution phase. And these can last some time. So this could actually last into the end of the year if we don't break out back to the upside. But that's what we're looking like right now. Notice the bullish percent index for the S&P and the NASDAQ 100. Both of them are still really weak, even with the rallies. So you can notice the high was way back here in July. Even as the market continued to rally to new highs, the bullish percent index on both of these continue to go lower. So that shows weakness. They're sitting right on the 50% point. So really critical juncture right now. Very important. All right, so remember that. And then the last thing I want to show you is I talked about, let me go back to the website. And on the chart lists and scans page for subscribers, I have, it's on the webinars and newsletters page for subscribers where there's a lot of training videos on here. And I've put a couple of them for Jesse Livermore. I'm actually going to probably create a page for Jesse Livermore. But the second one that I posted was the number one reversal signal. And the reversal signal that he noticed, this is 100 years ago again, he shorted the 1929 market crash, made millions of dollars because of this, what he observed for this. And what he said was the first thing that happens is the leaders stop making new highs or struggle to make new highs. That's the first thing to watch. The second thing then is those leaders then, as they pull back, they actually break the previous lows. And that's when the market starts to fall apart. So we know who the leaders are. I'm going to look at those. I've done this before, and I said that I would do it each week, which I will. And let's take a look at each one. So here's Apple. Here's Apple's one of the few out of these leaders that is still making new highs. So it's pulling back from this high right here. So we'll have to see if it can hold this area, 245. It needs to hold that. If it goes below that, then that's a new low. And then we'll see if it can come back up and break out and make another new high. So Apple actually still looks pretty strong. So the next one is AMD, also looks very strong. It's made new highs up here. Has not really broken down below these previous lows. But that's the line in the sand right there that we need to watch, 205, right around 200, 205. So that one looks strong. Arista Networks now is struggling to make new highs. When I looked at this last time, it had made a new high, and I said this is one of the stronger ones. It pulled back right to the previous lows and then tried to go back and make new highs, and now it's struggling. So Arista now qualifies. It is struggling to make new highs. It has not broken to new lows yet, though. So, and that's the thing that we have to watch on all of these. Here's Broadcom, can't make a new high, but has not broken the lows. Here's GE Vernova, continually cannot make new highs. This is the definition of struggling to make a new high, and it has now broken the previous lows. So as of today, GE Vernova, this is a daily chart. So as of today, GE Vernova qualifies as breaking down. Here's Google. Google is right at the previous highs. If it can't break out, then that qualifies as struggling to make new highs, and then we'll have to see if it can hold the lows right here. Here's Meta. Cannot make new highs. This one is struggling to make new highs. It actually broke the previous low and then pulled back above it. So Meta likely is starting this downtrend. Probably won't get back up here to these highs. Would not be surprised to see it go up a little bit and then fall apart and actually make another new low down here. So Meta qualifies. Microsoft qualifies. There's struggling to make new highs. Here's the low that it needs to hold, 490. Netflix, of course, terrible report yesterday. Netflix already qualified for struggling to make new highs, could not do it over and over again. And then today is breaking down below the previous low. So Netflix qualifies as one of the leaders that is breaking down. NVIDIA, there's the high. NVIDIA is one of the stronger ones. Made a new high. It actually had broken to new highs. This is an example of where it looked like it was struggling here, which it was, pulled down actually to a new low, but then started to go back up again and broke to a new high. So it needs to hold this high right here at 195. If it can't, if it goes up or goes sideways and it breaks through this trend line here, then it will qualify as one of the leaders that are breaking down. Here's Oracle, I just talked about. So Oracle qualifies, struggling to make new highs. It's sitting right on its previous low. So Oracle is testing that today. And if it breaks down, then it will be another one that qualifies as a leader that's breaking down. Here's Palantir. Palantir has been also another one of the strong ones. So it is also struggling to make new highs. You can see it went right back to the previous high, and then each successive high since then has been lower. And the critical low short term is, I'll show you, right here. So that's the very narrow channel that it's in right now. And this looks to me like a distribution phase for Palantir. So we'll see if it can hang in there. Next week are all the major ones. So Tesla reports tonight. I have a feeling Tesla is going to miss also. So it might continue to bring the market down. There's Tesla struggling to make new highs. And here is the critical juncture right about 420, just below 420, 415. So if it breaks down below that, then Tesla will qualify. And that's it. Those are the ones. Keep an eye on those. We'll do this again each week to see what the status of those are. Before I leave, I'll look real quick at each of these indexes. You can see S&P breaking down. There's the flip line right down here. Looks like it might be heading towards it. So it looks like all of these are reversing now. NASDAQ 100. Flip line is actually pretty low on this one, but that one's starting to reverse. Looks like the resistance, clear resistance at the highs right here. It's also a pivot point right there. So that one looks like it's reversing. Tesla might send, if Tesla misses tonight, then it may continue to send these down. And Russell 2000, it's been below the flip line, and it now is below the 21 as well. So this is definitely in a bearish configuration right now. And then finally, we'll look at Bitcoin. And Bitcoin is sitting right down here at a very important support level, right on the 200-day. It needs to hold that in order to reverse and potentially start a new uptrend. But if it can't hold that 200, it's a really critical area for Bitcoin at about 108. If it can't hold that, then it could easily get down to 100,000 very quickly. All right, that's it for today. Thanks for watching. Let me know what you think, anything you'd like to ask. And I will continue to watch all of those leaders each week to see if they are continuing to break down, which is going to give us a clue to the overall market and which direction it's heading. All right, thanks for watching, everyone. I will talk to you later. Please like and subscribe, and stay safe out there.